And we're back. Welcome to the StockOptionAssassin.com's free trade of the week. We did take a few weeks off as we were working with new members and the market got a little crazy. So we've been kind of managing positions and looking for new entries and things. But we are back to our trade of the week. So sorry for the delay. And the first thing I wanted to do, since we haven't done a video in I think maybe 2 or 3 weeks, is I wanted to talk about just kind of what's happened since the last time we did a video. Obviously the market's kind of rolled over here, what to expect, what can you do now. So let's just kind of take a quick look at the market. And so I'm just going to look at the SPY tonight, and I want to well, first let's talk about what you're seeing here. I have the SPY on 2 charts here. They're both daily charts. They're just 2 different indicator sets that I use. We use with our service. And basically on the left over here I have some directional movement indicators and a Keltner channel. Over here I have some moving averages, a squeeze indicator, and then also a directional movement indicator. This is the same indicator on the bottom here on both sides. And so I want to look at a couple things. So first of all, obviously the market's kind of rolled over here, and we continue to find support. We don't really notice it here on the spiders because and the overnight session last night really kind of came and retested these lows, and then we still gapped down today, but we managed to kind of claw back here. So a couple things have happened. So first of all, let's just identify some key levels. The lows that we've kind of almost sort of touched here are kind of line up with the lows from earlier this year in April. Now we actually didn't touch that low, so I actually think there's a good chance that we retest this, possibly pierce through it. Now we're looking at the spiders, but basically we've reached a low of about 1820 on the spiders, 1816, something like that. I think we could actually test 1800 pretty easily, and that would be about 180 on the spider. So it depends on which chart you're looking at. We're just going to look at the SPY for tonight. But I do think we have a potential for a short-term bottom here. Now, if you're not already long, or if you didn't buy the dip already, then I don't think you should do anything. I think you should wait for a bounce and look to get short. And what we're looking to do is basically, if you look at this previous low, which was in August, with the members, and a lot of people were saying this was around 1904 on the S&P. The 200-day moving average is here. We thought we would get a pretty good bounce off that, but we can see that with this leg down, we kind of rallied back up, that we kind of pierced through that, made another leg down. I think that over the next few days we have a pretty good chance of rallying back up, retesting the 200-day moving average, possibly piercing through it and retesting the bottom of these candles, early October candles, which is about 1920 or 192 on the SPY. At that point, I'm going to be a buyer of some SPY puts. I'm going to probably be looking to buy the Novembers slightly out of the money, maybe the 190s. So again, if we can get up to 190, 192, we look to buy something slightly out of the money, the November puts, and look for a retest and potentially a pierce low below that. And we're basically be looking to take profits quick. So, a side note was that today the St. Louis Fed President Bullard came out and said that the Fed may actually, should consider keeping QE in place where it's at. So they're still tapering QE. We all know that. If they do keep that in place, then that may sort of change the dynamic. So this is only a one-day thing. It's just some comment he made. But I do think with the way that the Russell was acting today, IWM, it's actually outperformed and it's been up the last couple days. The way the Russell is acting, it's trying to break this downtrend it's in. And remember, the Russell 2000 was the one that sort of let us down. It could possibly be the thing to lead us back up. Now, again, I think if the Russell retests 109, 110, I think if we pop a couple days, that's probably going to coincide with our buying puts with the spiders. But basically, on the bull side for a short-term bottom, I think that the Russell is showing a good sign that we could pop a little bit more. The other thing that I think bulls are going to like here is that oil has potentially found a short-term bottom as well. I'm looking at the USO. You can see we have some buy signals here where the oscillator is kind of flipping back up. We had a couple false breaks here, but we're getting continued sort of, the selling seems to be slowing down. If the Fed does decide to keep QE in place, or at least extend rates and all that, the dollar may take a little break, and that might give commodities a break, and you might see things like oil go back up. So again, oil, the Russell, looking to break their downtrends, or at least maybe put in a short-term bottom for maybe 1 to 4 day rally. And at that point, I would be a buyer of puts on the spider. So hopefully that helps, and we will be back to our weekly trade updates. And you guys have a great night, and I'll see you next week.